Assalamualaikum and selamat sejahtera to Encik Mohamad WASFI, our lecturer for this course, Company Law. Today, I am going to present about topic 6, namely account, report and audits. Before I start, let me introduce myself first. My name is Farisha Fatihah binti FUAD and I am from DPA30083 and I will be the first presenter for my group. Let us look briefly for the content of our presentation. For our presentation, it concludes three main parts which will be presented by each of us. It concludes introduction, procedures for appointment, right and responsibility of an auditor, and the qualification of an auditor. The terms of financial statement. A simple definition of financial statement is a document that summarizes an individual or business financial position, including assets, liabilities, and net worth. It is used to assess the financial health of an individual or business. The three main types of financial statements are the balance sheets, income statement, and the cash flow statement. The term financial statement has the same definition as used in the approved accounting standards issued or approved by the Malaysian Accounting Standard Board (MASB) under the Financial Reporting Act 1997. It is used to replace the term profit and loss and balance sheet, which were used to refer to the company's account that should be laid before the annual general meeting under the Companies Act 1965. As required by the Companies Act 2016, all publicly listed companies, private limited companies except those companies that meet the requirement of audit exemption and branches office in Malaysia are required to appoint an approved auditor to audit the accounts for each financial year. As specified by the Act under Section 248, directors are required to prepare financial statements, previously known as profit and loss, and balance sheet and reports called account. Term of profit and loss. Profit and loss statement is also known as income statement. It is a financial statement that summarizes the revenues, costs, and expenses incurred during a specific period of time, usually a fiscal year or quarter. Those records provide information about a company's ability or inability to generate profit by increasing revenue, reducing costs, or both. Profit and loss statements are often presented on a cash or accrual basis. Company managers and investors or creditors use profit and loss statements to analyze the financial health of a company. The profit and loss statement is one of the three financial statements that every public company issues quarterly and annually, along with the balance sheet and the cash flow statement. It is important to compare profit and loss statement from different accounting periods, as any changes over time become more meaningful than the number themselves. The next one is terms of balance sheet. It refers to a financial statement that reports a company asset, liabilities, and shareholder equity at a specific point in time. Balance sheet provides the basis for computing rates of return for investors and evaluating a company capital structure. It is also known as a statement of financial position. Balance sheet displays the company's total asset and how the assets are financed, either through debt or equity. It is based on the fundamental equation, which is assets equals to liability plus equity. Next is the term of audit report. It is defined as a written letter from the auditor containing their opinion on whether the financial statements give a true and fair view of the financial position of the company as of the financial year end and of its financial performance and cash flow of the year end. It also contains an opinion whether a company's financial statements comply with generally accepted accounting principles (GAAP) and are free from material misstatement. It is important because banks, creditors, and regulators require an audit of a company's financial statements. A clean audit report means a company followed accounting standard, while an unqualified report means there might be errors. An adverse report means that the financial statements might have discrepancy, misrepresentations, and did not adhere to GAAP. Let's move on to the requirement to appoint an auditor for public and private company. As required by the Companies Act 2016, all public listed companies, private limited companies, except those companies that meet the requirement of audit exemption, and branch offices in Malaysia are required to appoint an approved auditor to audit the accounts for each financial year. The Act also introduced a register of firms of auditor in which is kept by the registrar. Section 340 of Company Act 2016 states that every public company should hold an annual general meeting AGM in every calendar year to any other meeting held during the period to transact the following business. The first one is audited financial statements, director's report, and audit report, which by means an auditor is compulsory for public companies. As for private companies, an AGM is optional. This is a major change from the Companies Act 1965, whereby it was mandatory for all companies to hold an AGM, annual general meeting. However, the Companies Act 2016 enables members holding at least 5% of paid-up capital of a private company to request the directors to hold a physical meeting. The optional nature of AGMs means that the election of auditors and the tabling of audited financial statements dealt with separately. Members will still have the right to receive audited financial statements, although they would not have a quorum to discuss such statements. Auditors may be appointed to audit the financial statements, or the member will receive an unaudited financial statement during the annual general meeting. As for private companies, an annual general meeting is optional. This is a major change from the Companies Act 1965, whereby it was mandatory for all companies to hold an annual general meeting. However, the Companies Act 2016 enables members holding at least 5% of paid-up capital of a private company to request the directors to hold a physical meeting. The optional nature of annual general meetings means that the election of auditors and the tabling of audited financial statements dealt with separately. Members will still have the right to receive audited financial statements, although they would not have a forum to discuss such statements. Auditors may be appointed to audit the financial statements, or the member will receive an unaudited financial statement during the AGM. Let's move on to the next part of my presentation. It is the exemption to appoint an auditor. Section 267, subsection 2 of the Companies Act 2016 states that the Registrar of Company (ROC) may exempt certain classes of companies from appointing an auditor. On 4th August 2017, the ROC issued Practice Directive 3/2017. According to Appendix 5, audit exemption, exempting three categories of private companies. The first one is dormant companies, zero revenue companies, and the last one is threshold qualified companies. This one is meaning and objectives of audit. Definition of audit. An audit is an independent examination of financial information of any entity, whether profit-oriented or not, irrespective of its size or legal form, when such an examination is conducted with a view to express an opinion thereon. The primary purpose of an audit of a financial report is to express an opinion whether the financial statements (FS) is prepared in accordance with the identified reporting framework. An audit cannot guarantee that the financial statement is free from material misstatement, but it can provide a high level of assurance about its accountability. Objective of audit. Audit objectives are specific, clear, and measurable goals that auditors set before conducting an audit. The first one is opinion on financial statements. The main objective of the audit is that the auditor should express their accurate opinion on the financial statements. Example, whether the statements represent the true and fair view of the financial position of the organization or not. The second one is assess internal control. The auditor uses the understanding of internal control and the assess level of control risk in determining the nature, timing, and the extent of substantive tests for financial statements assertion. The third one is detection of frauds and errors. While pursuing subsidiary audit objective, auditors look for errors in the financial information provided by the company. What do? They identify if the records include any error, such as error of omission, exclusion, standards, and compensating errors. They also check if the company makes any new errors due to carelessness or unavailable information. They also ensure the methods the company follows to control and prevent such error. Another objective is to investigate financial record to uncover any financial fraud, misconduct, or irregularity. Next one is compliance with laws and regulation. Compliance audits are carried out by assessing whether activities, financial transactions, and information comply in all material respects with the authorities which govern the audited entity. The last one is providing assurance to shareholders. The objective of an audit is to provide investors and other stakeholders or shareholders with reasonable assurance as to whether the financial statements taken as a whole are prepared in accordance with the applicable financial reporting framework and are free from material misstatement. An audit is important as it provides credibility to a set of financial statements and gives the shareholders confidence that the accounts are true and fair.
Assalamualaikum, my name is Marina. I'm the second presenter. Let's start by looking at function of an auditor. An auditor is an independent professional authorized to inspect, review, examine, and verify the accuracy of business to identify errors, fraud, and misstatement of past financial performance and current financial position. The function of the auditor is to ensure that the financial information as to the company concerned, prepared by the director, precisely reflect to the company position. Two essential functions of an auditor. The first one is to report to members of a company on various matters relating to the preparation of the company financial statement. And the second is to report to register of company on any breaches of the Company Act 2016 which were not appropriately dealt with. Auditors are important in ensuring that the interests of shareholders are protected and the management of the company have acted reasonably. The shareholder depends on the good faith and efficiency of the auditor and to ensure that the action of the company in its daily operation are verified. They have characteristics of an auditor and comparison between internal and external audit. Internal audit is focused on measuring current performance and finding areas for improvement. Internal audit divided into audit committee and internal auditor. Internal audit also consists of internal control mechanisms set up by the company. Next is external audit. External audit is focused on proving the accuracy and veracity of financial statement. External auditor is appointed by the company shareholder. External auditor cannot be a shareholder. External auditor has extensive duties and obligation toward the shareholders, company, and third parties. The third parties, which is the borrower, client, investor, and creditor. Next, objective of audit and the company auditors are not officer of the company. Next, let's move into appointment of an auditor. The company or directors who appoint the auditor should ensure that the proposed auditor is qualified for the appointment as an auditor as required by Section 264 of the Act. Only approved company auditors may be appointed as auditors for the companies incorporated under the Companies Act 2016. First, the law remains the same in the Section 264, subsection 4 of the Companies Act 2016 requires every audit partners of the appointed audit firm to not be in breach of any of the disqualification factors set out in Section 264, subsection 1 of the Companies Act 2016. So, now every audit partner's post cannot be an officer of the company. According to Section 264, subsection 4, a firm of auditors shall not knowingly consent to be appointed and shall not knowingly act as an auditor for any company and shall not prepare for or on behalf of a company any report required by this act to be prepared by an approved company auditor unless, subsection A, all the partners of the firm resident in Malaysia are approved company auditor and where the firm is not registered as a firm under any law for the time being in force. A return showing the full names and addresses of all the partners of the firm has been lodged with the registrar, and subsection B is no partner of the firm is disqualified under subsection 1 form acting as the auditor of the company. According to Section 264 subsection 8, any person who is or any firm which is appointed as an auditor contravenous subsection 1 or 4 respectively commits an offence and shall, and conviction, be liable to a fine not exceeding 100,000 ringgit. To appoint an auditor of public company should follow under Section 271, while private company should follow Section 267 and 270. Before being appointed, the auditors must be prepared the requirement. The requirement is an auditor should meet the criteria relating to professional training, expertise, and experience capable of performing the duties of an auditor and has good character. Next, shall register as a chartered accountant with the Malaysian Institute of Accountant Acts 1967. An auditor should be independent of the company. An auditor also not owe more than 25,000 from the company or related company, and last but not least is his or her written consent to be appointed as an auditor. Next is the person who is responsible for the appointment of an auditor is the director. An auditor will appointed in AGM. An auditor must be prepared the auditor's report on time before AGM. Next is the members. If the directors do not appoint, members also can appoint the auditor. The last one is the registrar of company on members' return application and failure to appoint by a private company. Next is methods of appointment auditors for private company. According to section 267, subsection 1, an auditor should be appointed on every financial year of a company. Next, according to section 267, subsection 3, as for newly incorporated companies, the appointment by the board of directors should be done at least 30 days before the end of the period for the submission of the first financial statement to the registrar. An auditor may also be appointed to fill a casual vacancy, which is usually done by the BOD. Either the board of directors will appoint the auditor, or in the event that the board fails to do so, the members of the private company shall appoint the auditor through ordinary resolution. If a private company fails to appoint an auditor, a member of the company may write to the registrar to ask them to do so for the company. The auditor ceases to hold office 30 days after the company's financial statements are circulated unless he is reappointed. Auditors of a private company are deemed to be reappointed unless the shareholders submit an objection at least 30 days before the company's financial statements are circulated. If no auditor is appointed, the outgoing auditor is deemed to hold office unless he or she is appointed by the board. Next is the constitution of a company requires an actually reappointment. And last is according to section 270, the deemed appointment is prevented by the members representing at least 5% of total voting rights of all members entitled to vote. Next, for appointment of auditors for public company is according to section 271 subsection 1 that state an auditor of a public company shall be appointed for each financial year of the company. Prior to the first AGM, according to section 271 subsection 2 subsection A, the board shall appoint an auditor at any time before the first annual general meeting of the company. Next, subsection B, the board shall appoint an auditor to fill casual vacancy in the office of the auditor. For each financial year is according to section 271 subsection 3. Any auditor appointed under subsection 2 shall hold office until the conclusion of subsection A, the first annual general meeting for the appointment under paragraph subsection 2 subsection A. Subsection B, the next annual general meeting for the appointment under paragraph subsection 2 subsection B. And if the board fails to appointed will by the members. Next is upon a written application of any members, and if a private company fails to appointed will by the registrar. The last is term of office. Unless the auditor is appointed, he or she ceases to hold office at the conclusion of the AGM following his or her appointment.
Hi, my name is SYAHIRA and I'm the third presenter. So today, I want to present about approval and validity of approval by the Ministry of Finance. There are many qualifications of an auditor under section 260, start from subsection 1 until subsection 4. Section 263 of Companies Act 2016. Subsection 1. Any person may apply to the minister charged with the responsibility for finance to be approved as a company auditor. So, if someone want to be an auditor, he or she must be honest and not to tell about the company finance with the people outside. Subsection 2. The minister may, if he is satisfied that the applicant is of good character and competent to perform the duties of an auditor under this act,
Upon payment of the prescribed fee, approve the applicant as a company director. So here that means if the director see that the end auditor can perform well, so the company's director may ask the end auditor to audit the financial statement in their company. Subsection 3. Any approval granted by the minister under subsection 2 may be made subject to such limitations or conditions as he thinks fit in, and may be revoked at any time by him by the service of a notice of revocation on the approved person. Okay, so for example, if the end auditor not perform in his duties, so the director may be able to revoke him at any time, but it must be with notice of revocation. And the last one is subsection 4. Every approval under this section, including a renewal of approval of a company auditor, shall be enforced for a period of 2 years after the date of issue unless sooner revoked by the minister. Next requirement under section 264. A. Prepare any report required by the Act on behalf of the company. For example, like prepare the financial statement. And B. Or the company or a corporation related to the company in exceed of Rm 25,000. And C. Either the auditor or his or her spouse should not be an officer, a partner, employee or employer of an officer of this company. This is because to prevent other problem in the company. For example, if husband and wife will fight and work in the same company, it will affect with the surrounding. Number 3. A shareholder or his or her spouse is a shareholder of a corporation whose employee is an officer of the company. D. Either he or she, or if he or she is a partner or employer of a person who is responsible to keep the register of members or debenture holders of the company. Okay. For example, if the end auditor given trust by the director to keep all about the finance company and not to share with the outsiders. E. Undischarged bankrupt within or outside Malaysia except with a leave of court. And F. Be convicted of any offence involving fraud or dishonesty punishable with 3 months imprisonment or more. Okay, this will be happen if the auditor violate the rules and not to be honest in the company. Other qualification required for an auditor is he must expertise and experience, capable to performing the duties of an auditor, and has a good character. Apart from that, he should be independent of the company and not owe more than 25,000 ringgit from the company. And the last one is he must consent to be appointed as an auditor. That's all from me. Thank you.